While cryptocurrency has made a lot of billionaires, it has also wrecked a multitude due to their investment attitude. So I'm going to share the ultimate guide on how to invest in cryptocurrency with the right attitude and make profits. But before then, what is cryptocurrency? Cryptocurrency is just a digital currency created using encryption algorithms as an alternative means for making payments. And there are four major types of cryptocurrencies. We have the utility, payment, security, and stable coins. We also have the NFTs and DeFi tokens and asset-backed tokens. It is very important to understand this before jumping into investing your money in cryptocurrency. The first cryptocurrency was launched by Satoshi Nakamoto and he named it Bitcoin, and it has been on top of the chart since then, and thousands of other coins have been created and introduced into the market. So now the question is, what is the best practice when investing in cryptocurrency? But before we dive into the investment phase properly, I want you to take note of the cryptocurrency investment golden rule. Only buy the low and sell the high, and never panic to sell the low because the market will always bounce back. Having said that, it is important to know the two phases of cryptocurrency. We have the bull run and we also have the bear market. The bull run is the period in the market when the prices of cryptocurrencies are going up high and we see a lot of green candles. At this point, all the investors are happy and making a lot of profits from their investments. Now, this is a very sensitive phase in the crypto market. The whales are in massive profits and showcasing their big portfolios, and then the fear of missing out set into the inexperienced traders and newbies to jump into the market and gain some profits too. At this point, it is very important to remember the golden rule. Always buy the dip and sell the high. Never jump into the rising candle. Now the inexperienced traders are jumping into the market because the prices are going up, and the big boys, the whales, are gladly selling their profits and saving more money for the bear market. This ushers us to the bear market. The bear market is a period in the market when the price of cryptocurrencies are going down and we see a lot of red candles. And at this point, there's a big chaos in the crypto market, and the inexperienced traders who jumped on the rising charts are panicking and scared of losing their investments. Because they don't want to lose their investment completely, they decided to salvage part of it by selling their cryptocurrencies. Now this is the point in the market where the real game is being played. You will notice that the same big whales who sold their profits to the inexperienced traders in the bull run buying the same cryptocurrencies from the inexperienced traders at a lower price in the bear market. This is because they understand the golden rule: buy the dip and sell the high, because the market will always bounce back. So how do you know when the prices will go up or go down? The change in price of cryptocurrencies can be triggered by different factors, such as new government policies like SEC suing the team behind the cryptocurrency, which causes panic and causes holders of such coins to sell their holdings, thereby decreasing the price, or a big company like Tesla announcing that their transactions will be done through cryptocurrencies. This will in turn spike the prices. So it is important to pay close attention to the news around crypto. Now that you have learned the golden rule of cryptocurrency investment, how do you begin? I have classified cryptocurrency investment into two. We have the institutional investment and private investment. The institutional investors are the big ways that controls the crypto market, and examples are banks, Tesla, and other big companies in the game. And the private investors are guys like you and I. So before investing in cryptocurrency, you should know that cryptocurrencies are known for their volatile nature. This means that the change in prices can happen within a minute. So the first step in investing in cryptocurrency is to choose a cryptocurrency of interest. This involves making a lot of researches, such as reading the white paper of the crypto to learn about the goal, the objectives, and the vision of the project. The white paper should be realistic and achievable before you consider investing. And if you notice any red flags like unclear details, please do not invest. You should also research the team behind the project. Check if they have visible profiles and good traction for their milestones. I don't recommend investing in projects with anonymous team. Also try to understand how the blockchain technology of the project is being used to solve people's problems. If it's a good and innovative technology, it's a sign that the project will continue to grow in prices. And more importantly is the community of the project. Join the Discord and Telegram community of the project to learn more about the leadership and the activities of the project. You should also look out for the tokenomics, because learning about the tokenomics is very important. The tokenomics of a particular project or cryptocurrency is simply the volume in circulation, the distribution, and the total supply of the coins. This will affect the change in the prices of the cryptocurrency over time. So after checking these parameters carefully and you are confident about investing in a particular project, the next thing is to select a cryptocurrency exchange. An exchange is simply the platform for buying and selling of different cryptocurrencies. Are you still with me and getting values from this video? then kindly go ahead and smash the like button because it means a lot to me. So when choosing an exchange for your cryptocurrency investment, please confirm if it operates legally in your country. Check the ease of use if it has a user-friendly interface, and also check the liquidity to avoid losing your investment. Investors like you and I need liquidity to start a new trade at any time, so the exchange needs to have enough orders flowing through their order books at any given time. This is the major reason why I use Binance, and if you want to get started with Binance, I will leave the link in the description below. You should also check if the cryptocurrencies you have decided to invest in are available in the exchange. And also you need to research the security level of the exchange, the withdrawal and deposit limit, and their trading fees. Although most exchanges have built-in wallets, it is important to research a cryptocurrency wallet to store your cryptocurrencies before starting an investment. A cryptocurrency wallet stores your public and private keys and provides you with an interface to manage your cryptocurrencies. So you should look out for some of these features when researching a cryptocurrency wallet to store your cryptocurrencies. The first thing I always look at is that the wallet should have top-notch security by providing private keys, and also you should look out for the gas fee charged by the wallet whenever you want to swap your cryptocurrencies. There are also many wallets out there today, so to avoid losing your investment, you should also look out for the reputation of the wallet so that your investment is not compromised. Buying a cryptocurrency is like buying assets in the stock market. Although cryptocurrency market is a very volatile market, but it is advisable to do long-term investments, so you should invest money that you probably won't be needing for the next 5 years. This will maximize your investment and profits as it compounds over time. So now at this point, you have probably invested in some cryptocurrencies that you researched and piqued your interest. The final phase is to manage your portfolio properly to maximize profits, and this is how to do it like a professional investor. So after investing, your eyes are your investment and looking out for the maximum profits. Remember that the crypto market is a very volatile market, so you shouldn't be a greedy trader. And also you should try to understand your risk appetite level and stick to it properly. Decide on the profit percentage you will reach before selling a particular coin. And most importantly, you should never be emotional with your crypto investment. It is very easy to be swayed by emotion to sell your coins when in a losing trade or bear market, but you should always remember the golden rule that the market will always bounce back. Emotions can also set in after a price correction to sell your coins immediately you reach your entry level. This will also make you to lose out on the future profit because the prices of cryptocurrencies will continue to rise. Emotion can also lead you to the fear of missing out when a cryptocurrency is increasing in price. Never buy the high, always buy the low and sell the high. Also, it is important to note that the rule of investment diversification also applies to the cryptocurrency market. Don't put all your eggs in one basket. Spread your investment across different viable coins so that when the price of one coin is going down, the increasing price of the other coins can keep your portfolio in profits. And more importantly, you should pay attention to the trends and news around cryptocurrency as it can affect the price change. This will keep you informed about when to buy the dip and when to sell the high to make profits. If you are still watching this video to this point and you are still with me, please let me know in the comment section if there is any important factor to look out for when investing in cryptocurrency that I forgot to mention in this video, and I promise it's gonna be interactive. And if you would love to watch more videos on how to make money and attain financial freedom, then ensure to subscribe to my channel and get more notifications as videos are posted on this channel. Thank you for watching to the end of this video, and do enjoy the rest of your day. Bye.